to my hand? Yeah. Here's 10 tips for filling your home buying piggy bank. Budgeting 101. So you've probably read plenty about budgeting by now, and that's pretty awesome. If you haven't, the basic summary is this. You want to sit down and decide how much money you can spend in various categories like rent, utilities, food, and so forth. Almost no one gets this right. And almost no one sticks to their budget because they're lying to themselves. They say they want to spend less money on takeout, but they don't. Not really. They don't want to stop seeing a movie every weekend. Whatever it is they say they'll give up, they won't. And you and I won't either. So let's use that liar budget as a starting point and really look at your expenses. Your rent, utilities, insurance, and so forth, they're reasonably fixed. So at least that's something that you can't really influence too much. You could move to a smaller apartment or turn the heat down, but assuming you're not going to do those things, you can basically assume these are fixed costs. Other costs like dining out, buying new clothes, investing in hobbies, or even sending your dog to day camp are costs you have a lot more control over. This is where you can really make a difference in your budget. Remember, you're saying over the long term, so nickels and dimes matter. When you write a budget that says you're going to stop eating out with friends on Saturday night and you won't buy another new shirt for 6 months, or you won't go to the theater when the next great Marvel movie comes out in order to save, it's pretty unrealistic to expect that. You'll be able to do that. You can't maintain that level of self-deprivation, especially with Marvel movies. I mean, come on. Endgame? That was not the end. Instead, do the things you do, but reduce your spending by 10 to 15%. Check out the clearance racks, order a slightly less expensive entree, or make some coffee at home instead of going to Starbucks twice a day. 10% is almost nothing. You can easily drop that little bit into your savings account and watch it add up bit by bit. It's realistic budgeting. It's budgeting for real people, not imaginary people in accounting textbooks. 2. Take advantage of auto-saving features on your accounts. Increasingly, banks are figuring out that it's easier to trick you into saving money than asking you to do it. They might make $1 for every transaction you make with your debit card, for example, and drop it into your savings account. This doesn't sound like it will amount to much, but think about it. How many times you use your debit card over the course of a month? That really adds up. Other accounts like investment apps like Stash and Acorns configure to take small amounts of money from your checking account when they're at high levels and leave that money alone when you're just barely scraping by. Investment accounts carry some risk, so that money isn't as secure as what would be if it were squirreled away by your bank. But you can always sweep it into your true savings account from time to time. Number 3, ask yourself if you're using all those subscriptions. I mean, come on. It's easy to get ahead of yourself when it comes to little subscriptions. Oh, Netflix is only $16, Hulu's only $12, Audible $15, and so on and so on. Since they come out automatically, you can hardly give a second thought. The money just magically dissolves. This is a huge source of economic hemorrhage and a great place to start looking for money you could be saving. If you made a budget like we talked about in tip number 1, you know how many subscriptions and memberships you have. How many of those do you really use? If you only log into Hulu for one show and it's been discontinued, finish it, binge watch it, then unsubscribe. Start dropping that $12 into your savings account instead. You only pop into the gym when it's day after New Year's, right? So cancel that and toss the money towards your future. You can always put a home gym in your new house and completely ignore that room like I do. It's amazing how many subscriptions we hold on to out of habit or simply because we don't think to cancel them. Number 4, download apps for the stores that you frequent. Beyond being a handy way of figuring out where they hide the bars of Irish Spring, downloading the apps for frequently visited retailers often gives you access to their digital coupons. These things are great. They're simple too. All you have to do is scroll through a list of coupons, load them to your membership. And then you can scan the items as you go through the store and build up a list of coupons that are applicable to your shopping. Then show the QR code to the cashier for your discount. Either way, if you use digital coupons to help plan your shopping, You'll not only be able to skinny up that grocery budget, but you may glean additional benefits like gasoline savings from the same retailer, like Vaughn's. Go ahead and deposit the coupon savings in your future home account and subtract the whole bill from discount from your budget to make the books balance. Either way, if you use digital coupons to help plan your shopping, you'll not only be able to skinny up that grocery budget, you may glean additional benefits like gasoline savings from the same retailer, like I do at Vaughn's. Go ahead and deposit the coupon savings in your future home account and subtract the whole bill before discount from your budget to make the books balance. Number 5, don't make that big purchase. Hey, is your car 10 to 15 years old? Maybe it's time to go buy that Tesla because it'll pay for itself in the long run. Just stop. Keep your eyes focused on the prize of home ownership. Keep the old car. A few $100s for repairs and upkeep per year is a whole lot better than a $300 per month car payment plus additional insurance costs. Number 6, consider refinancing. This is suggested with a caveat. If you're already in the process of buying a home, don't do anything that might touch your credit. This is only for people who aren't ready to talk to a realtor and are looking for dollars and cents to put together for one of those days. Whether you've got a car loan with a high interest rate or a student loan that was never consolidated, you may want to consider refinancing some of your debt. Look for lower rates, longer terms, get smaller payments, but don't sign on the dotted line unless everything looks just right. And remember, simply because your new car payment is $200 doesn't mean you can't pay $300 later once you've closed on your new home, unless there's a prepayment penalty, in which case, just say no. Being able to drop that extra money into savings now means you can move toward your home buying goal more quickly, and your bank will view you as a smaller risk because your debt to income ratio will be smaller. Refinancing can be a sort of double whammy when done correctly. Just realize you may end up paying more in the long term because of additional fees and interests along the way. Number 7. As you pay things off, start paying yourself. I know you really wanted that extra breathing room now that you've paid off your Target card, but instead of spending that freed up money every month, why not pay your savings account instead? You're already used to making the payment, so your budget won't change, and you've managed to make it every month so far, so you know you can do it. It's not forever, it's just until you buy your new home. And hey, if you have a surplus, you can go on a shopping spree to IKEA. Please take me with you. I love IKEA. Just make sure you wait until after closing. Surprise expenses can appear at the last minute, and you don't want to be caught with your arms full of Swedish meatballs. I wonder if they make vegan Swedish meatballs. Number 8. What do you spend maintaining your stuff? I mean, come on, does your stuff need its own budget? Think about this long and hard before you answer. Lots of hobbies and belongings require considerable upkeep. If you're not really using them anymore, or you're not really enjoying them like you used to, it may be time to part ways. Sure, you thought having a giant aquarium would be fun, but all the food, the filters, equipment, it all adds up. By eliminating that aquarium you don't really enjoy, you could be saving yourself in 2 ways. First, you can divert the money you spend on your fish into your house savings. And second, you don't have to figure out how to move that gigantic thing into your new house. It can be quite the undertaking. The same would apply to anything that needs regular care and feeding, like a project car that has to be insured, or a motorcycle you don't ride anymore because you just don't have time. Turn those old hobbies into cash by selling them off, then funnel that money in to use to pay toward them into your savings account. Now, if I just get rid of my wife's dog, probably not going to happen. Number 9, ask for help from family. Do you have a rich grandma that might be willing to gift you a little bit of money to help you buy a home? Or perhaps mom and dad would be willing to fork over a few dollars to help get you out of their basement. Number 10, take advantage of down payment assistance. Did you know many cities and counties, as well as some states, have various programs available? If you qualify, you may be able to get into a home with very little money or no money at all. When you're ready, check with me for the details and availability. Come to your loan application prepared with a stuffed piggy bank. If you use any or all of these tricks to stuff your piggy bank, you're going to have an easier time saving money all over the place. That house will be yours in absolutely no time. Then when you're ready to make a loan application, check with me first. I'll get you with my partner to run the numbers, put together the best route to homeownership for you.
Yeah.
Let's see how much money we have.
No! Okay, I'm gonna open it like you.
Oh.
I open